Here's my USP. Mr. and Mrs. Buyer, I work a little different than other real estate agents. I don't just help people buy homes. I help them build wealth using real estate. My goal, I don't know if this would work for you, my goal would be to help you buy a home and within 12 to 17 years, pay off 100% of your debt. Mortgage, cars, credit cards, student loans, all of it. And I can help you do it with money you don't even know you have available. Would that be something you'd be open to? Folks, whoever says no to that? Recently, I helped a client buy a $230,000 home with a 30-year payment at 4%, got $5,750 in closing costs paid for by the seller. He had a $39,000 car loan and $49,000 in student loans. With two simple strategies, if he follows the plan I created, he'll be 100% debt-free in 11 years and 2 months, saving over $166,000 in interest, and that doesn't even take into consideration the 18 years of payments we eliminated either. Pretty amazing, right? Now, it gets better. If he started investing the monthly payments, and all he did was put it in a CD at 3% for the next year, 18 years, at the end of the 30 years, he would have accumulated $873,000 in cash. If I were able to help you get the same savings, well, that'd be a huge help to you financially, wouldn't it? This is actually the scenario. This is a real life client. We call it My Equity Blueprint. If he followed the plan, he'd save $166,000. He'd be completely debt-free in a little bit more than 11 years. Then what would happen is, remember, here's where I got the numbers. If for the additional 18 years, once the house was paid off, all the debt was paid off, and he took what he was using, put it in the bank at 3%, just put it in a CD, nothing fancy. I know you can get a higher rate of return. I want to be conservative. Well, if every month he put that money away for the remaining 18 years, he would have accumulated $873,000. Now that's bringing value to a client, isn't it? But how do you do that? Well, for me, when you work with us, and again, this is kind of part of what I talk to people about. Now, you have 4 options when working with me. Number 1, you can buy a house, get a loan, pay it off in 30 years. That's the American dream. I got to be honest with you, any real estate agent can do that. You can buy the home, pay it off in 7 years, and if you took the money you were using for your mortgage payment and put it away at 3%, you'd accumulate $672,000. Option 3 would be, well, we could play adult monopoly. If we could pay off a house every 7 or 8 years in the same 30-year period that you're going to work with some other real estate agent, well, you could buy 4 homes, pay them all off, live in one, and collect rent on the other 3. Let's say you gather $1,500 a month in rent. Well, now you got $4,500 a month coming in. Well, that's a heck of a retirement plan. Oh, yeah, and by the way, because rents go up, it's indexed for inflation. Option 4, you can buy a house, pay it off in 12 years. It takes a little bit longer because at the same time, we're creating a tax-free retirement plan with the money you would pay to the bank. Now, what's important to understand, Mr. and Mrs. Buyer, is I'm going to do this all with the same amount of money every other realtor and lender would have you spend every month. If you would teach renters how they could do this, how they could buy a house, get it paid off in 11.2 years, and put $873,000 in the bank, that makes no accounting for appreciation of the property. They're just short of being a cash millionaire, and I promise over the 30 years, the house appreciates, right? Even if you have a crash, can we all agree if you had a house in 2008 when the market crashed, it's worth more now than it was in 2008? So long term, it's going to appreciate. Well, if renters actually understood that, they understood that they got a tax break for having a mortgage instead of a lease, and they could accumulate hundreds of thousands of dollars, can we agree they wouldn't continue to rent? So I asked them, at the end of 30 years, I have to put a sign out in your front yard. I have to put one of these 2 signs out there. Which one do you want me to put out there? I had a 4% rate, 3% rate, 2 3/4, and I paid $263,153 in interest. Or I had a 1.275 effective rate and paid $125,000 in interest. So I'm going to ask all of you, do you want me to put the red sign up for you or the blue sign up for you? Please answer it for me. Let me know you're here. Let me know this makes sense. I know you don't know how I get to it. Well, everybody says the blue sign, just like you guys are. Well, of course they do. Well, what do I mean effective rate? And that's what we're going to talk about. So, Mr. and Mrs. Buyer, hiring the right realtor can make a huge difference. It's all about money. See, when we work together, either you like the house or you don't. You're never going to see me try and push you into, hey, isn't this, a lovely house and all. I'm not going to do that. My job when we go into a property is to see what I can learn about the house so that I can cut the best deal for you. I can get you the lowest price and the best terms. So when it comes to buying real estate, this is about your money. And what I would tell you is hiring the right realtor makes a difference because, well, you could give it away and never know it. And let me show you how that happens. There's two things to consider. If I ask you, which would you rather have, a lower price or better terms? Well, folks, doesn't everybody say, well, lower price? Well, I just want you to understand, and this is, I won't need you to go through the whole thing, but instead of lowering the price, if I actually bought your interest rate down, right? So if I had a house for, let's say, $200,000 and I got it for $195,000, I had to pay X amount of dollars in interest. But if I said, well, I'll pay you the $200,000, but I want to take and use $5,000 to buy my interest rate down, that would save you $19,550 in interest, and you'd save 21 months of mortgage payments. Now which one would somebody want? A higher price or better terms? Because it's about the money that you pay. Folks, that's $20,000 in interest. And remember, are they really staying for 30 years? They're not. So this is about how do we help them build equity quicker. Let's save them the $19,000 to $20,000, and let's say they do stay in the house for 5 years. Well, that's $4,000 a year we put in their pocket. You pay $5,000 more for the property, but you save $4,000 a year in interest. Which is better? See, here's what every other lender and realtor can help you do. Buy a house, get a loan, pay it off in 30 years, right? That's what you guys can do. So let's look at a different choice. And this is an actual scenario that I did with somebody a couple of years ago, but they had $25,000 in a car loan, $7,500 on a credit card balance at 14%, and $2,500 at 15%. Now, what I want you to understand, Mr. and Mrs. Buyer, this is accomplished with the same amount of money every other realtor and lender is going to have you spend. So we purchased the house and we finance it at 4%, so rates are a little bit lower now. You have a monthly PMI or a monthly P&I payment of $930. You got another $330 a month as taxes, insurance, mortgage insurance. In this same scenario, I can take and have you completely debt-free in 11 years and 6 months. We eliminate 221 payments, or $205,742.16 in payments. I can save you more in payments than the cost of your house. And then if we simply took your mortgage payment, invested it for the remaining 17 and a half years at 3%, you'd have $600,079.26. Mr. and Mrs. Buyer, at the end of 30 years, what would you prefer? A house that's free and clear, or a house that's free and clear plus $600,000 in the bank? Which would you prefer? So the average home buyer's plan is this. Tell me if this resonates with you, Mr. and Mrs. Buyer. You found a realtor, right? You came across me at an open house or whatever it was. Then you're going to shop for a 30-year mortgage, and I'm going to guess you really want to negotiate hard to get the lowest rate and costs, right? They go, oh, absolutely. And then you're going to buy the house. Well, here's what you don't know. You're going to refinance it every 5.1 years. That's the national average. Now, you're going to sell every 8.7 years, which is the national average. Unfortunately, if you keep doing that, guys, you refinance every 5 years, you move every 8, well, you're never going to pay off that 30-year loan, are you? Which means you retire with a mortgage, because the average baby boomer with a median retires with a median total savings of $35,000. Can we agree, guys? You're not living very long on $35,000 in retirement. So what they do is they trade their mortgage for a reverse mortgage, which is not a bad thing, with one exception. Well, what if you didn't have a mortgage? Well, if you still have the mortgage, then it's a logical thing. Well, Mr. and Mrs. Buyer, sadly for most, this isn't what their plan was. Their goal was to buy the house, pay it off in 30 years, but they forgot some key things like, hey, I'm going to refinance it every 5 years, and I'm going to sell it every 8.7 years. We didn't take that into account. Well, today we're going to take that into account, because what I do is I try and help you think and act like a banker, not a borrower. And what banks do, folks, is they dramatically reduce the cost of borrowing. Then they have a plan to do something with the money. And then my goal is to help you increase your rates of return on your investments. Because here's the thing, this is what Albert Einstein said. Those who understand interest earn it. Those who don't are destined to pay it. Well, here's how you know where you fall in. If you go into your mailbox and you take checks out, you're earning interest. If you go to your mailbox and you put checks in, you're paying it. If it's okay with you, I'd like to have you stop paying on debt. I'd like to have you stop paying interest. Is that okay? Well, again, guys, nobody says no. Well, here's what you need to understand, folks. It's how banks make money. They borrow low and they invest high. They take your money, you put it into a savings account, they pay you 1%, maybe 2%. You can get a CD at about 3%, 2.75 right now. And then what they do is they go and loan it to you on your credit cards, your car loans. So they borrow money from you at 1%, then they give you a credit card, right? Because every time you go to the bank, hey, get your Wells Fargo credit card. Well, then they're loaning you your money at 15 to 25%. The reason I share this with you, folks, is that I want you to understand the bank is not your friend. It's like Vegas. It's a game for them, and they always win. Why? Because they know how the game works. And nobody teaches you as a consumer. So here are the facts. So take out your notepad now, folks. I'm going to go through a bunch of numbers. Let's just work on a $200,000 loan. If you buy a house at a 4% rate, and I'm using that for an example. I know they're not 4% right now. But you buy a house at $200,000, not including the taxes and the mortgage and property insurance, right, on the property, you're going to pay a total of $343,738 to the bank. You borrowed $200,000, you're going to pay back $343,000. So now your lender comes along and says, hey, I can refinance you at, say, 3.5%. I'm using that as an example. Rates are a little bit lower, so the savings are big, but the math still works. It doesn't matter. If you refinance, you're going to save $28.38 a month. We borrow $200,000, we pay back $143,738 plus the original $200,000. What if we stop focusing on the interest rate? Because, well, if you got it at 3.5%, all you're saving is $28 a month. I mean, I don't think that's going to stop you from buying a house, right? So you're worried about the note rate on your property at 3.5%. Go, oh, Bob, I got 3.5%. Saved you $28 a month. And you never pay attention to the almost $144,000 in interest you're paying to the bank. You never focus on it. You just go, oh, that's the way it works. Stop saying, well, that's the way it works. It doesn't have to be that way. Let's focus on the interest dollars that you pay. So when you work with me, we're focusing on the dollar, not the interest rate. I could care less because, well, I'll be honest with you, you're going to refinance every 5.1. You're going to move on average 8.7. So why do I care about the interest rate? Here's the thing, guys, it gets even worse. So when you refinance your loan in 5 years, and I kept this at $100,000 to make this easy for you, right? So let's say we had a loan at 4%, $100,000. The monthly P&I is $477.42. After paying 5 years on it, 60 months of payments at $477 of just the P&I, you paid it down by $9,729. So make no mistake, you got $9,729 that you paid off. So your lender comes to you and says, hey, I can cut your rate and lower your payment every month. And you go, sweet. It'll have about $3,000 in closing costs, and I can do one of two things. You can either pay those in cash or we can roll it into the loan. Which would you prefer? Well, what does everybody say? Well, yeah, roll it into the loan. I don't want to come up with $3,000. Well, now what you just did, folks, is, well, you now have a $93,711 balance. That's just the way it works. We have that as a loan balance. And let's say your new payment at 3%, right? So you saved a full 1% on that payment is now $421.60, meaning you save $55.82 a month. Well, that's a big deal. Now, the way that your lender, Dave Ramsey, Susie Orman, everybody else in the world says, well, here's how you calculate if it makes sense for you to do the refinance. You take the $3,000 it costs you, divide it by $55.82, and it takes 53.74 months, right? Is that how it is? Raise your hand, folks. Let me know that you're here. Does this stuff make sense with you? I know I'm going through a lot of numbers. I warned you up front, I was. So raise your hand if you agree that's how it works. Cost me $3,000, 55.82, 53.74 months. Okay, getting lots of yeses. Cool, because Dave Ramsey, Susie Orman, debt gurus out the wazoo, making millions and millions of dollars telling people that this is the way to do it. If you doubt it, go to bankrate.com and punch in refinance calculator and see what happens. It's going to calculate the same thing for you. Well, here's the problem. It's 1,000% wrong. It ain't even close, folks. The actual time it will take you to repay that loan is 392.12 months or 32.71 years. And you're going, no, how could that be possible? Well, remember, You made $21,916 in payments. You have a $93,000 loan balance, but you're starting all over at 30 years. If you take the $3,000 in closing costs and the $21,916, that comes to $24,916. Divide that by the $58 that you saved every month, and that's where you get it. Because, well, you made almost $22,000 in payments, and you're starting over again with a just short of $94,000 balance. Folks, it's like walking into the bank and handing them $24,916, right? The payments plus the $3,000. You just handed it to them again and started all over. Why would you ever do that? You just don't know that, right? You don't think of it. Because at the end of the day, who's got the money? You or the bank. And if it's okay with you, Mr. and Mrs. Buyer, when we do things like that, before you would ever consider something like that, you're going to call me and we're going to run the numbers to see if it makes sense. So what I will tell you as a lender, does it make sense for you to refinance? In most instances, no, it does not. Now, if you got a ton of credit card debt at 25%, we'll run the numbers, see if it makes sense. It probably does at that point. Could you take and refinance it to a 25-year loan? Yes, you could. But here's the thing, you won't save as much money, and so it's not as glamorous. So when you don't save as much money, you won't do the loan, and the lender doesn't get paid. If it's okay with you, Mr. and Mrs. Lender, I'm going to become your advisor, and you're going to check with me before you ever did it, because the bank can't keep keeping your money, or they can't continue to keep your money, and you get ahead. Because this is what the average person in the United States right now is doing with their mortgage. We as real estate professionals and lending professionals can help with that. So let's help by teaching. Because, well, here's the thing, Mr. and Mrs. Buyer. When was the last time a realtor, a lender, a CPA, or a financial advisor showed you these facts? Well, how do we do all that? Well, guys, it's actually pretty simple. It's very simple. Consider this, an extra $30 a month added to a $100,000 mortgage at 4%. It eliminates 38 mortgage payments, $30. You go, well, Bob, everybody knows that. Yeah, everybody does, but nobody does anything about it. How do we do it? We just help them accumulate money they don't know they have to pay off the debt. So I created a 4-step cash flow and debt elimination plan called My Equity Blueprint. First thing I have them do, I have them sit down and tell me where they're spending money. They do that. I don't do it for them. They go through their banking. Then I can look at it in 10 minutes. What I can do is I can help them reposition cash. Simple things, right? Like, well, look, when was the last time you guys went out and shopped your auto and homeowners insurance or your cell phone bill? Well, last time I did, I saved $91 on my auto and homeowners insurance, and I saved $60 a month on my cell phone bill. Well, that's $151. Well, now apply that to your debt. And then I created a customized equity plan for them that tells them what to pay and when to pay it. And I can walk them through it once I have their numbers. It tells them what to pay and when to pay it. Here's how you do it. This is how I'm going to advertise your house. I got the same house, same value, same conditions, same everything. But I'm going to take and put a sign like that, say 53272, and then a text code on that. Mr. and Mrs. Buyer or seller, if you were buying the house and we came into this neighborhood and you've seen those three homes were all in a row, which one would you want me to call on first? They go, well, the one in the middle. Exactly. So now I can get more buyers to reach out to me and say, hey, do that. So I set them up with a text code to do this. I put it on the videos we use to promote their house. I use it in Craigslist ads if we do that. Then we actually let them download the blueprint for it, right? So it goes to a download. So now I get accurate information. Gosh, what would happen if you did this to promote your open house and that's what your open house signs look like? Now, they don't always have to say bank owned. You think we're going to get more traffic, folks? Imagine having open houses like that. This is one of my guys with zero promotion. 100 people, 300 in a day, 325 in a weekend, 586 people in one open house.